Okay, good morning everyone. Well, it's actually afternoon now. I've been busy because we've had the news today, as everyone knows. Well, I'm sure you know. You should know if you don't. Um, yeah, a lot of interesting price action today, and I think it's a really good day to illustrate some of the techniques I use and some of the um, kind of trading I like. Um, Now, most people on a day like today, you've got the market opens at 10 to 10 and you've got till 11:30 on the news and they won't trade. They'll say, oh, there's no trading opportunities, we've got to wait for the news and then we're going to jump in, But, like I choose to look at it a slightly different way. There's always opportunities. And the way I trade, I can read all price action. I should think you want to read all price action. Um, it gives you something to do all the time, and you know what sort of price action to avoid. If you can't read it, you don't know what to avoid. Okay, so my point this morning being that a lot of people were standing back and waiting for the news, but in that time there was about three or four really good trades, um, and that's kind of what I wanted to show you today. Now on the open, it's a very interesting open. Um, I tweeted these charts this morning before the open. There's a line through the highs here, right? Um, and you can see we've had overnight, we've had sort of like some big pullbacks. You can see um, this is this pullback here. That's the it's news in the US. I think it was a bad profit result for one of the tech companies or something. I was half awake when I saw it. Anyway, we found support here in an obvious spot. It was actually, if you have a look at it, it was the open from that morning in our Asia session. I've got it in here in yellow. It's not that easy to see. I'm sorry, but trust me, it's there. And we've tested it here during the day, just after the close as well. You can see the close up here, bang, tested that yesterday's open and shot straight back out. So any of those trades would be good trades. So last night I did get long here, and I got something out. Um, I'll tell you the truth. Okay, I got long here on a breakout of this level. It broke out, came back, got long. It went one tick in, and then started hovering around my entry level. Umming and ahhing and umming and ahhing at around 12:30 or 1 o'clock in the morning, and thinking, should I get out or is it just sort of like testing the level? Here comes the news, kabam. Okay, so I took a loss there. I had a look at the charts again. I said, okay, so I took it here and I got it all back. Very lucky. I'll be honest, I wasn't really paying attention to the news, and there's a big lesson for all of you and a lesson for me as well, once again. The market never stops teaching you things and never stops enforcing its rules. Okay, so quite apart from that, last night after this big move, it worked its way back up and indeed formed almost a new high, double top through here. I pointed that out. So on the open, what I was looking for was a retest of these levels here. Um, if it did that, that would be a signal of a buy. And the other thing I was looking at was this line here. I thought that might come into play today. And it's just another point I'd like to illustrate that you've got to constantly keep looking. You've got to constantly redraw your charts. You've got to constantly reset and rejig your mentality and the way you're thinking. You can't just set it at the beginning of the day and then put your orders in and walk away. It won't work. The market evolves during the day, and you should be reading that. You should be looking at the price action. You'll be seeing how it reacts to particular news items. See what happens when China opens, when Hong Kong opens, when Japan opens, those kinds of things. Um, they're all important. So what I'm really interested in here is it opened up here, and it was a terrific trade straight off the open. Look, it opened right under here. You can see these initial moves. It got you about 3 or 4 ticks straight away, and that's right within our 5 tick range that we talk about. Well, I talk about it all the time. I don't know if anyone else does. 5 and 5. I talk about 5 and 5 all the time with the SPY. On a 5-minute chart, you get 5-minute fractals. Okay, it works almost in the grid. This is actually a 15-minute chart. But the point of the 5-5 is that you need to know that it's got 5 ticks to go, because that's what it often does, right? So when you take a trade, where is it going to go? Is it going to go 5 ticks? Well, there's a good chance it's going to go there, yes. Is it in the right direction? Okay, there's a whole bunch of questions you've got to run through quickly in your head. You've got to train yourself to do that. Right, so you could get a few ticks out. I'm not saying I did. I actually held on too long and I got stopped out, but it busted through and it's ended up holding this level. It didn't like it, and then it just drained back in. Okay, so there's another trade here which is off the top, and you can see what happened. Let's go down to the 5-minute chart, and that might be a bit clearer. You can see what happened. It came very close to the top of this previous price action. It pumped down. If you wanted to take it a tick early, sometimes that's useful. Sometimes it gives you another tick loss. It's trading. That's what happens. But look, the point I wanted to make here is if you take that trade there at say 508, maybe you'll be a tick above that, 509 and a half, and it actually went to 15. Guess what that is? That's your 5-tick fractal. Okay, you're not going to get in at 9 and get out at 15. You might get 3 or 4 ticks. It's valid, and that may well have just come down, tested, and then shot straight back out, and done exactly what I drew this morning. And I showed everyone that. I tweeted it actually. Let's find that chart so I can show you. It's not that one. It must be this one. That's the one there. I actually drew it in. Up, out, test, come back, and then up to the bottom of this trend line that it's been riding for a little while now. Bang, bang, and then up again here. So it hasn't done that. It seems like it might have made a high for now. Look, I'm basing that on something else, which I want to show you right now, is this SPY futures chart. Now, I just had a look at this. I saw it last night, started noticing. Actually, let's get rid of that. I drew these on myself. They look terrible, don't they? Remove that, and remove that. I'm not saying this is going to happen, but to me, it looks like it's rolling over. Just based, that's a 1-hour chart. If we scrunch it up, we can see we're at new highs with the S&P 500 futures. It does look like it's rolling over to me. All the way through here, higher highs and higher lows, and there's a blow off at the top there. We've got a resistance, fairly strong resistance level there around 170. I'll just draw that in, and now we're starting to have lower lows and a couple of lower highs and a couple of lower lows. It's got like a nice round top there. Now I'm not saying that's what it's going to do, but it seems clear that this last bit of price action isn't forging ahead so hard, So let's just see, and our market definitely seems to be sort of having a little breather as well. So it might be just a breather and then a new move up, but it might be chances to put some shorts in and start to move down. What that would look like in our market after such a long run, and we can see what's happened today with those figures that have come out. Disappointing figures, indicating there's a definite rate rise. Well, the pundits are saying a definite rate rise coming up. Rate cut, sorry. Yes, it's a rate cut. We don't see any really obvious signs of a change in trend. We've got a new high here. It has rejected it, just based on today's price action. This is a 1-hour chart again, but it's back into this range here, so that could easily you could easily short it here and look for these levels down here and even into this trend line. If it is, there's a long way for it to go. Bearing in mind that there's a lot of price action to fight through here. There's not a lot of clear air, except for perhaps here. Let's put that in and show it. That'd be an obvious target. If we start to get a move down, a little bit of open air here for the price to target, but it's not a lot, and a lot of price action to move through. So probably your first target would be, I would suggest here. These are obvious levels. You don't need me to tell you these levels. Anyway, this is very interesting. We'll see the remainder of the day's price action, and we'll see what happens tonight in Europe and the US. We could see another move down. It could be a weakening move if we go out to, where are we? Let me put a daily or a weekly on. I like to keep these up. Here's another thing that a lot of people don't really do is they try and switch between charts. Mark your charts up, keep one each. It's heavy on your computer, but I mean, just don't play games where you've got all this stuff up. This is what I want to do. Remove the drawing tools. Okay. Hide drawing. Yeah. Okay. And you can see on a daily chart, we've sort of started to form a bit of a consolidation here. It's around about these lows, which is the big figure here, and we've gone up and tested these closes up here. Once again, closes matter. We need to pay attention to them. Less important on it, when you're looking at a long-term trend, but they still matter. All of these things you have to pay attention to. Now, I'm getting really off the topic here. Now, what these trades were this morning was the short up here. It came in a few ticks, 3 or 4 ticks. Okay. The next one, the bounce off here again. The next one, the bounce off here. Remember I said that what I was looking for was the open. If it opened and came back and tested this, it was a buy. Well, even though it didn't do it on the open, it came back and did it. And have a look at the figure it did. It did from the big figure all the way up to 12, so a 12 tick fractal. That's a good trade, So these are key points that you have to pay attention to. And another thing I'll point out, this is a 5-minute chart. See the beginning of this price action here? Guess where it went to first? There you go. Bang, and reacted. Then came down again, bang, and reacted again. So these are important points, like anything that sort of stands out. That point, this point, that point, right? That point. You can see how it hovered around that high there for quite a long time last night. Excuse me. Okay, then what happened? I was long here the second time, and there's another lesson. This is a really important one. You want to be doing the first hit. Sometimes when things are consolidating, you can do hit after hit after hit. This doesn't look like consolidation. It could well have turned into that, but I went long on the second hit, and I got taken out. Okay, so then I'm looking for my next trade. Do I want to turn around and try and short it? Probably not, because there's a level here, and a level here, and a level here. Unless you get a pullback and a test there, looking for some sort of a 5-minute close and then a pullback and a test there, but that's not what happened. What we got is a complete collapse through that level. And I don't know what time that was. What time was it? Oh, we haven't got the right time on there. That's the problem with having a lot of charts up. They're not always set up exactly the same. Okay, so yeah, that was after the news, and we had a complete sort of just a collapse. It's working its way back up, but we have a resistance level here. What you're got to worry about in this resistance level is this open space here. It's pretty overlapped. That's from pretty recent price action, so it's not necessarily going to cover that. It has been covered recently. I'm looking at a short here, based on, as I said, the futures chart, the S&P 500 futures chart, that there's a rollover. So, and the fact that this is giving me a lot of indication that we don't want to, the market's not keen to just keep pushing higher, especially today. Okay, we've opened higher and then drained and drained and drained. Let's see what this will turn into. Another point I wanted to point out is this is the open, yesterday's open, and this is yesterday's close. Markets pay attention to those, right? They really pay attention to them, and you should pay attention to them too. That's all for the moment, and I'll have a look later on, and good luck everyone with the rest of your day, and let's talk later. Okay, here we are. Now, what I wanted to show you was this. Let's try and expand this out a little bit. Make it a bit clearer. Okay, I went short here.
I did something I tell everyone else not to do, which is I held it through here. It hit this and it's come back, and we've seen it collapse back into this range. Look, I'm interested. It seems to be holding above this little swing high here. I'm interested in this coming right down in and having a down day, because what I want to show you is, let me see what, I've got one of my other windows here, this one. Let me just, it's not the one I wanted to show you actually. It is, okay, let me just refresh that so we can have a quick look at it. This is the cash market. We're looking at yesterday's cash close. So we had a level here on the futures, which is it stopped and stopped and stopped. It's busted through and it's tested this one. So in reality, your best bet as a trader would be to wait for the high probability trade, which is a test of this level and a fill of this gap. So here we are. We tested it, bang, and straight back down again. It's still currently heading down. I'm about 5 or 6 ticks in now. I'm targeting these lows here, and I just want to see if we actually have a down day today. If it really, it's hovering around yesterday's close. Let's see if it says right, today's not our day. Let's give it away, okay? And it's the buyers are just going to say, okay, it's time to sort of hold on a bit here, based on perhaps the US market. You never really know what's going on. Anyone, there's stuff going on you don't know about, you don't have to know about it, you have to read the chart. That's your best bet. Read the chart, read the chart, read the chart. Okay, we'll leave it alone and we'll have a look later on. Good afternoon, everyone. We're looking at the price action for 27th of July 2016. We talked a bit about the early morning price action today. Now, what I wanted to talk about this afternoon, it's been a very quite a difficult day, quite a lot of gappy moves, a lot of open moves, a lot of blow through of levels. That's going to be bad for a price action trader. You're going to get stopped out, stopped out, stopped out. It's just the way it is. But there is a logic to it, so let's look at the positive side of it and see if we can learn something from it. So what I wanted really to talk about today was this. Let's bring up the the ASX site's line chart, because it's often very instructive. As we can see here, I was actually short here, down, back, test, and then bang. So that was a good trade. We may have seen a continuation. You can get it off this level. You can get it off like the yesterday's close, the day before's close. We looked at this level here, bang, bang, bang. It blew through, tapped this. We've got another move down. I thought that we might get a continuation today. I was short, holding a short. I actually was already short here. I took something out and I got back in just this little bleed through here. I thought it would test this, or this like swing low, or the previous day's close here, and then maybe have a run down for a change. But that's not happened, and we've had this brutal up move here, like 30, I don't know how many ticks it was, 35 to 55, like 20 ticks, pretty much in one go. If you have a look at the cash market, I might see if I can bring that up for you. That would be this one, I think. Let me just, I'm having trouble finding it. It's not that, it's not that. Yeah, it'd be this one. Let's get rid of this one. And I can see it on here. Sorry, this software is new to me, but anyway, we'll get there. This is the move here on the 1 minute chart of the cash market. And as you can see, I was short somewhere around here, got something out, looked at this swing low, holding below this swing low, so I thought I entered another position, thinking we might get a run through this fractal and the low there, and just whack, 20 ticks. It looks like it hasn't even really traded, just opened the whole way. And then unfortunately, you could have held it, but you're not to know that. That's not how you trade, and it's bled all the way back down. I stopped myself out. I've gone long again here. You could see. I don't think I'm showing you that actually. Oh, sorry, I'll have to go over here so I can show you. Just repeat all those things. Short here, down through this swing low here, holds for a little while, thinking this is a sign that we could get lower levels, and just a massive open move to the high here. It's around 20 ticks, and then off a bleed down for the rest of the day. Very difficult trading, very hard to pick a level on these, but still there are levels here. Then there's a level through here. I went long here. You can take one position out and then get stopped out, and you can see by the nature of the 1 minute bars here, it's just not much going on. There's big gaps between the minute bars, and it doesn't usually do that. When there's reasonable liquidity, you don't really see that. You see more of this kind of action. You can see it on previous days. It's a little bit smoother, a little bit more sort of connection between the bars, a bit flowier. On a low liquidity day, you're going to get horrible moves like this. Anyway, we don't want to dwell on that. You have bad days. That's why we have stops. That's why we have daily limits. That's why we have weekly limits. That's why we have monthly limits. And let's use it as an opportunity to cover some of those things. You should know how much you're prepared to lose each day. You get to that limit, you stop trading. If you get to your weekly limit on Wednesday, you stop trading. You get to your monthly limit 2 weeks in, you stop trading, and you just have to, because that will happen to you. Trading, you'll have a bad run where you're just not seeing it. It just will happen to you, and you can't escape it. You can't escape it. It's part of trading. Everyone has bad days. Everyone has bad runs. So you need to know what percentage you're going to lose each day, what percentage you're going to risk on each trade. Your risk to reward should be more than 2 to 1. But as I said, this is 5 tick fractal, so your stop's going to be around 5 ticks, and your first profit will be around 5 ticks. And then you're moving to break even, so you need to get something out to. This is my technique, okay? Other people have different techniques, but I found this to work. If you don't take something out within 5 ticks, a lot of the times you're going to miss out. And taking a little bit out, it could be 30%, it could be 50, it could be 70. It depends on your risk parameters and what you feel comfortable with, and the way you have to develop your own ideas and feelings for these things. You'll try out. What I suggest you do is try out. Pick a technique. I've just given you 3. Try one of those, and then do it exactly the same way each time for a month, let's say, just for an example, and then have a look at your results. Keep good records. Learn how to use Excel. There's a big tip, and you'll see if it's working or not. Then you say, okay, well, let's change one parameter. Let's take 50% out instead of 70, or 30 instead of 50, or 50, and whatever you want to do, and let's hold on for 10 ticks, or you'll have to go through that process and find what you're comfortable with and what's working for you. So we've covered a couple of points there. We've covered a lot of risk management, money management, and daily, weekly, monthly limits. I don't think you need to go to yearly limits, because if you get to that, then you're probably you're probably out of the game by then. You lost all hope. I don't want to sound pessimistic, but by then you probably haven't so much. You've destroyed your positivity by then. So you've got to stop yourself out. One thing I used to do at work is another instrument I used to trade is I just realised from looking at my data that if I had 2 losses in a row, I rarely had a good day. Some days I got it back, some days I had a break-even day, but more often than not, I had another couple of losses. And just looking at my data, I decided that if I have 2 losses during the morning, that was it for the day. I'd stop, and it saved me a lot of pain in the long run. Because the good days, they usually you might have 1 loss and then have a good one and then have a run. I think partly it's psychological, and partly it's just your particular way of trading is not working with that particular session's price action, and you'll find that out yourself with your own data, what you're good at and what you like to do. Okay, so we've covered a few things there. What I'd like to show you is what I was going to say about, let's move this 1 minute chart out of the way. I know I cover a lot of ground, and the logic that I was going to show you for this is the 1 hour chart we used this morning. Oh, sorry. I'll get that out of the way so we can see it. This is the one I tweeted this morning, and you can see the logic here. It's had a shot higher this morning, and then it's pulled right back into this range. There's this horizontal resistance level here. By no means it's telling us that the up move's over, but it's had a shot over there. And look at, as I've said how many times before, closes matter. Look where it's closed. Close, 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 close. Once that wick had formed there and it had a close, it's traded that range for the rest of the day. Now, oh, sorry, I'm using the wrong pointer. Anyway, you can see this horizontal resistance level here is what I was talking about. Close, 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 and then it's used that range all day. And here's the lows from overnight, I think it was, and then all day today. It's just hit it and hit it and hit it and just bled through and bled through and bled through the yesterday's close, but it doesn't want it. Doesn't want a bar of it. Okay, I think I've belated that point at the moment. So let's sign off for today, and we'll have another look in the morning and see what sort of happens overnight. As I mentioned with the futures, S&P 500 futures, we're seeing a sort of a rounded top here, so it's still bullish. There's no real correction, but there's an indication that this may well roll over, and maybe that's some early signs of it in our futures chart here for the S&P 500. The ASX 200. So by no means we're bearish, by no means are we seeing a trend change, but we could have some early signs of it. And indeed, in the last couple of days, we've had a few decent short moves and then recoveries. So we're going to be keeping an eye on that, get some early ideas and early indications of what, whether that trend's changing. Because if we can get it, and if you can leave something in, as we always talk about, you could be the first into that big trend change move, because the first move is usually quite a big one when it first releases, especially after a long bullish run like we've had. That first one could be a heavy move. You could get 60 ticks or 80 ticks out of it. Anyway, I'll sign off for today. I'll post this video and I'll talk to you all tomorrow. Good evening.